If Warren Buffett had to start his investing journey all over today, he wouldn't do what most people do. Most beginners think investing is about finding the next big stock or making easy, fast money. They scroll through social media for hours watching trending videos and try to copy whatever seems to be working for other people. The focus is always on speed. How fast can I double my money? How quickly can I get massive results? But that's not how real wealth is built. If Warren Buffett had to start again from scratch today, he wouldn't be chasing hype stocks or jumping into risky trades. He wouldn't be trying to time the market perfectly or reacting to every piece of news. Instead, he would focus on a few simple principles that most people completely overlook. The truth is, the biggest advantage in investing isn't intelligence, luck, or even starting with a lot of money. It's discipline, patience, and time spent in the market, and the way Buffett approaches investing proves that. What he would do today is much simpler than most people expect, but also far more effective over the long run. People listen to Warren Buffett because he is widely considered one of, if not the greatest investor of all time. And for good reason. Over the course of several decades, he turned relatively small investments into one of the largest fortunes in the world. But what makes his story so powerful isn't just the amount of money he made, it's how he made it. He didn't rely on risky trades, luck, or chasing trends. Instead, he focused on long-term investing, consistency, and making smart, calculated decisions. He built his wealth slowly over time by sticking to a strategy that most people would consider boring, but that's exactly why it worked. Buffett has always believed that investing doesn't need to be complicated to be successful. In fact, simplicity is one of the key reasons behind his results. If he had to start from zero today, he wouldn't suddenly change his strategy or try something new. He would follow the exact same principles that built his success in the first place. His biggest advantage wasn't large amounts of money. It was time. If Warren Buffett were starting from scratch today, the very first thing he would focus on is getting started as early as possible. Not with a huge amount of money, not with a perfect plan, but simply by beginning and accumulating time in the market. Buffett has always emphasized that time is the most powerful factor in investing. The earlier you start, the more time your money has to grow and compound. Most people delay investing because they think they need more money or more knowledge before they begin. But that delay is exactly what holds them back. Every year you wait is a year of potential growth lost. Buffett would never sit on the sidelines waiting for the perfect moment. He understands that the perfect time doesn't exist. Instead, he would start immediately, even if it was with small amounts. Because over the long run, starting early with small amounts is far better than starting off big later down the road. Time is what turns small investments into something meaningful. He doesn't think in days, he thinks in decades. One of the biggest differences between Warren Buffett and the average investor is his time horizon. Most people focus on short-term results. They check stock prices daily, react to market news, and make decisions based on what's happening right now. But Buffett takes a completely different approach. He invests with a long-term mindset, often thinking in terms of decades instead of days or weeks. If he were starting over today, that wouldn't change. He wouldn't be worried about short-term fluctuations or temporary market drops. Instead, he would focus on where his investments could be years from now. This long-term perspective allows him to stay calm during volatility and avoid emotional decisions. It also gives his investments the time they need to grow. Patience is one of the most underrated skills in investing, and he has mastered it by focusing on the long term. He removes the pressure to constantly react, and that leads to much better results. He doesn't follow trends, and neither should you. The modern investing world is filled with noise, social media trends, viral stock picks, and constant opinions about what to buy next. Most people get pulled into this because it feels exciting and fast-moving, but Buffett has always taken the opposite approach. He doesn't chase what's popular, and he doesn't make decisions based on what everyone else is doing. Instead, he focuses on value and long-term potential. He understands that hype or trends is usually driven by emotion, and emotional decisions rarely lead to good outcomes in investing. If he were restarting today, he wouldn't care about what's trending or what people are talking about online. He would stay focused on proven principles and avoid distractions. This ability to ignore hype is one of the key reasons he's been able to succeed consistently over time. Warren Buffett has always believed that it's better to buy a great company at a fair price than a bad company at a cheap price. Most beginners do the opposite. They look for low-price stocks hoping they'll go up quickly. But price alone doesn't determine value. He looks at the strength of a business, its earnings, its consistency, and its long-term potential. He wants companies that are built to last, not ones that are just popular in the moment. If he were starting today, he would take the time to understand what he's investing in, instead of chasing quick opportunities. This approach reduces risk and increases the chances of steady growth over time. It may not feel exciting, but it works. And over the long run, focusing on quality is one of the most reliable ways to build wealth. Consistency is one of the most important parts of Warren Buffett's strategy. He wouldn't invest once and hope for the best. He would invest regularly, whether that's monthly, weekly, or even daily over time, no matter what the market is doing. This is what allows compounding to really take effect. Most people struggle with this. They invest for a short period, then stop when they don't see immediate results or when the market becomes uncertain. But wealth is built through repetition and discipline. Small, consistent investments may not seem powerful at first, but over time, they add up in a big way. By investing regularly, you remove the pressure of trying to time the market perfectly. Instead, you focus on staying in the market. If he were starting today, Buffett would prioritize consistency above almost everything else, because he knows it's one of the biggest drivers of long-term success. Markets are always going to go up and down. It's part of the process, but most people react emotionally when things don't go their way. When the market drops, fear takes over, and they sell at the worst possible time. A big piece to Warren Buffett's success has come from doing the opposite. He remains calm during market downturns and continues investing as usual. In fact, he often sees these moments as the best buying opportunities. When prices drop, strong investments become more attractive. But taking advantage of that requires discipline and emotional control. Buffett doesn't let fear dictate his decisions. He understands that short-term volatility is normal, and he focuses on the long-term outcome instead. This mindset is what separates successful investors from the rest. If you can stay calm when others panic, you put yourself in a position to make better decisions and achieve better results over time. One of the biggest mistakes beginners make is expecting fast results. This often leads people into quitting too early. They invest for a short period, don't see immediate gains, and assume it's not working, so they quit. But investing doesn't work like that. Warren Buffett's entire strategy is built on patience. If he were starting over today, he wouldn't expect to get rich quickly. He would understand that real wealth takes time to build. Compounding doesn't feel powerful in the beginning, but over the years it becomes incredibly impactful. But the problem for most people is they never give it enough time to work. They jump in and out of the market, constantly changing strategies, and never stay consistent long enough to see results. Warren Buffett does the opposite. He stays invested and trusts the process. Over time, that patience pays off in a big way and starts the snowball effect, where compounding starts to rapidly take off, creating real long-term wealth. If you want to build wealth, you have to be willing to think long-term and stay committed to the process. One of the most surprising things about Warren Buffett's approach is how simple it really is. He doesn't rely on complex strategies, constant trading, or trying to predict the market. He keeps things very straightforward. Invest consistently, focus on quality, and think long-term. That's it. Most people overcomplicate investing because they think complexity leads to better results. But in reality, it often leads to confusion and mistakes. Warren Buffett's success comes from sticking to simple principles and applying them consistently over time. He avoids unnecessary risks and focuses on what he understands. This simplicity makes his strategy easier to follow and more effective in the long run. If you're just starting out, you don't need to make things complicated. Keeping it simple is one of the best things you can do. So what does this mean for you? If you want to invest like Warren Buffett, you don't need to copy every single move he makes, but you can follow the core principles that built his success. Start as early as you can, even if it's with small amounts. Stay consistent and make investing a regular habit. Focus on quality instead of chasing trends, and think long-term instead of reacting to short-term changes. These ideas may sound simple, but they're incredibly powerful when applied over time. The biggest mistake people make is thinking they need to do something complicated to succeed. In reality, it's about doing the simple things consistently. You don't need perfect timing, and you don't need to know everything before you start. What matters is taking action and staying committed. Over time, those small, consistent actions can completely change your financial future for the better. At the end of the day, the biggest difference between people who build wealth and those who don't comes down to action. Most people spend years thinking about investing, researching, and waiting for the right moment, but they never actually begin. Warren Buffett didn't wait, and if he were starting over again today, he wouldn't wait either. He would take action immediately and let time do the work. The sooner you start, the more time your money has to grow, and the longer you stay consistent, the bigger the results become. You don't need to overcomplicate it or try to be perfect. You just need to begin. If you're in Canada, a simple way to get started is by using Wealth Simple. This is personally what I use. It's the most beginner-friendly, easy to use, and designed for people who are just getting into investing. I've got it linked in my bio and in the description. You'll get a free bonus when you sign up and make your first deposit. Don't wait, just start. Let's change our financial future for the better. Together. Let us know down below in the comments your personal investing strategy. And as always, don't forget to like and subscribe to Wealthonomics for future videos, because smart money starts here.